Good day, ladies and gentlemen, and please click down below and subscribe to my YouTube channel. And I promise we won't bother with anything. Just whenever I upload a new video, you'll get a ping so that you can come watch it at your convenience. Now, today's class is, I've called it architecture trading. Okay, I've been trading since 1972. And of course, the world was a different place. We didn't have online trading. We didn't have the internet. We didn't have computers. And I was a trader on at Chicago Board of Trade in Chicago, where I sat in the pits. And trading was a simpler time. We couldn't get data fast. We couldn't get news fast. We couldn't get reports fast. And our trades were a lot slower. But I also believe that all of this modern technology has given too many traders access to too many mathematical types of trading. Okay. Now, I like to simplify things. I don't mean make them stupid. I don't mean make them guessing. But I like to look at a chart and a price and be able to tell a story and see what's happening. Now, there are many large players in the Forex market, such as hedge funds and large banks, and they all have advanced computer systems that constantly monitor any inconsistency between a currency pair. Same thing whether you're trading gold or oil, you're trading CFDs, whatever it is. You can't outsmart these huge computer systems from these big guys. Now, we can take advantage of some of it. We can take advantage of inconsistencies in the market, or we can find other ways to find opportunities. Now, one of the greatest goals of a technical trader in the Forex market is to determine whether a given pair will trend in a certain direction, or if it will travel sideways and remain range bound. The most common method to determine these characteristics is to draw trend lines that connect historical levels that prevent a rate from heading higher or lower. Now, keep in mind that when a trend develops, it takes a lot of momentum, but the market must, there's no other choice, either trend up, trend down, or trade sideways. That's it. The market, you don't have any other choices. But once a actual trend, now a trend doesn't mean price moved up, fell back down, moved up, fell back down, moved sideways. Okay. A trend is a very distinguishable thing. And it takes momentum. Traders start moving in and moving. It's like if you ever watched a hamster getting in his cage and jumping on his wheel. It takes him a lot of work to get that wheel turned. But once that wheel starts turning, it takes him a lot more work to stop it. Now, when you're a trader, you have to have determination, hard work, practice. Practice some more. Hard work again, repetition, observation, and experimentation. Now, in my architecture trading, not strategy, price analysis or understanding price movement, what I've done is I've taken things that you're familiar with and given you a way to see price and make it something that's familiar, and let you tell a story about what is happening in price. So we're going to start out today with my 4-story building strategy, or my 4-story building market analysis. Now, this uses, or we could use the terms support and resistance. We could use the term price levels. Okay. We can use lots of terms. But let's imagine there's this big 4-story building on the corner in a busy downtown area, and it covers the entire block. So it's a big building. Now, you're coming to work in the morning, and your train got in early, and you've got some extra time on your hands. You don't have a meeting till later. You're moseying along. You're taking your time. You're not rushing to get in that office relatively fast, because when you pop off the train, you usually grab your coffee and go right to work. Today, you got some time. It's a beautiful day. You're in a good mood. So instead of going to the little coffee shop, thing downstairs in your building before you go up to work, you stop here right where you get off the train, and you step inside this ground floor of this huge 4-story building. And when you stick your head inside, you see there's a coffee stand, a coffee shop, there's a Starbucks, there's a Dunkin' Donuts. There's mostly everything on that ground floor is retail, but it's mostly like a huge food court. There's some other kind of convenience stores and something else, but it's a great big ground floor. It's got entrances and exits to all the different, all the four streets surrounding it. And because it sits right on a major subway stop. So you go in and get your coffee, you get a donut, you're taking your time, and you look across the space and you see these two elevators and a sign with the listing of the floors. So you know what? I've worked down here past this building for years. I have no idea what's in the building. So you walk over towards the elevators and you see the sign, and you could see lots of doctors' names and lots of lawyers' names and accountants' names, professional services. And you can see on the third floor there is a conference room. And okay, so the elevator opens while you're standing there, and the housekeeper gets off. She's going to clean the lobby, and you say, you know what, I'll drink my coffee and get on. I want to see. I'm just being nosy. Told you this was boring. It's not boring. We're going to get to the point. Okay, and the elevator door closes. Now you're not going anywhere, so you don't push any buttons. But let's start. The elevator is price. Okay. You've already evaluated the floor that price is on. You've also evaluated the range that price should be moving. Now you have the floor below your feet in that elevator, and it's supporting you. Now the elevator, in order to move up, you have to go through that ceiling above your head to reach the next level. So what is that? That's your resistance. Okay. And the elevator goes up, and there's nobody else on there. It opens at the next floor, the first floor, and you see this dark wood paneling on all these long hallways. You see a very professional dark carpet, beautiful wall sconces, and you realize it's lots and lots of professional offices. You see signs, but you don't step off the elevator. The door closes and it goes up to the second floor. And what you realize is the second floor is as lovely, but it's not as open. There's not many doors, because most of those offices on the first floor have second floor where they have offices, but you go into the main office and then there's a stairwell that takes you up to where the individual offices are. Okay. Door closes again, it goes up to the next floor, and it opens up, and you see all these signs for conference rooms. Conference room 1, 2, 3, 4, 5. So it's the conference rooms that have been booked by the services downstairs to use it. You also see there's a law library up there. They're the joint services for the professionals down below. The elevator goes up one more floor, and the doors open, and you see what it is. It's not as luxurious as everything else, because it's storage areas. It's where the lawyers and doctors store their records, their office supplies, all the stuff outside their office. Door closes again, and it says roof. Goes up to the roof deck and opens, and it's a beautiful roof deck enclosed in the center. You see coffee machines, you see vending machines, you see sitting areas, and you see all these balcony doors that open to the roof for smokers. So what have you done? You've actually now evaluated all the floors in the movement of price. Now, we also realize you're very early for work, so it's very, very early in the morning. So you started, in your head, you're kicking the things around. Well, in the morning, there'll be lots of traffic from that elevator to that ground, to the first floor with people coming to work, and probably some activity from that elevator from the first floor to the roof deck, because people who came to work either going to come up there and sit with their coffee, or they're going to come up and smoke. But there won't be much traffic to the third floor, because you don't see any conferences scheduled except one in the afternoon. Second floor doesn't have much traffic because it's mostly all, with inside the office. And the third floor, there's the storage spaces for all those offices. Till people are actually coming to work, they're not going to be used. So what have you done? You've now not only determined the levels of support and resistance and the floors that are important in the price movement, you've made up a story, and you've analyzed what the traffic should be. Now, as it gets closer to 9 o'clock, that elevator should be very, very busy from ground floor to first, and should also be kind of busy up to the roof deck. So you could estimate or guesstimate when that elevator door closes where it's going to go. Now, later in the day, say at 2 o'clock, and you saw that that conference room was scheduled at 2 o'clock, there's probably going to be lots of traffic from the first floor to that conference room. Because all those people that are going from the meeting and whoever else is coming from the meeting come from the ground floor to the conference room, and the staff from the professional office going up for that conference. Okay? So you can now analyze how price should move. And this is just a story of price and how it should move. Now we can take a look at our charts, and we can have our 4-story building. We could have our low-rise building. We could have our high-rise building. So first is deciding how price is moving and what range it's moving in. Okay. And then determining where the elevator should stop and go. You can even have basement. You have a building with a basement where price is constantly falling down to that basement level. Okay. Maybe that building has a support staff. Maybe that's where the housekeepers and the handyman all have offices. So you can have 4-story building, mid-rise trading, you can have high-rise trading, elevator trading, underground parking trading, basement parking trading. But all of it allows you to see price in an easy to understand, easy story. And when you can look at price and make sense of price, you can start on your way to making smart trading decisions. So I would appreciate once again if you would subscribe to my YouTube channel. But you have things like elevator trading or high-rise trading where price soars straight up and keeps going up and then comes down like the floors of an elevator. You have 4-story building trading that we just talked about. Because I'm a price action trader, so my favorite indicator is that price is always trying to tell me a story and it won't ever lie to me. So it's all about being able to interpret price action. Price action is a form of technical analysis that focuses solely on past prices that have traded in the market. Price action trading is a discipline of making all of your decisions in trading from a clear price chart. This implies that there are no lagging Forex indicators present, maybe some moving averages that'll help us see the trend, and dynamic support and resistance to give us dynamic support and resistance areas, and along with a trend direction. All financial markets create data concerning the movement of market prices over varying time periods, and this data is demonstrated on price charts. Considering that price charts reflect the belief and actions of all market participants, either human or computer, trading a market during a particular period or for those beliefs are displayed on a market's price chart in the form of Forex price action. As a market's price action reflects all variables influencing the market for any given period, exploiting lagging price indicators like MACD, the stochastic oscillator RSI, and others can be just a waste of time. There are traders who might say that price movement provides all the Forex price action signals you will ever need to design a profitable and highly probability trading system. So to learn more about price action and reading charts, please visit our YouTube channel and watch all of our videos. I keep posting them up there. They're all free to you, and watch them at your convenience. So surely most traders that end up making it as traders will find this specific study of technical analysis eventually. But it's usually won after multiple disappointments and failed attempts at building indicator-based strategies that zig when the markets actually zag. Price action will never lie to us as traders because it purports to tell us what will happen, but rather it will tell us what has happened. Simply put, price action is a footprint for money. Financial markets are where money is exchanged between market participants. It's important to learn price action trading not just for your general knowledge, but to amplify your trading arsenal in general. Furthermore, price action trading encompasses price action strategies from key levels in the market. Price action strategy can be traded in any financial market and any time frame. So the answer is very simple. Price is the essence of any financial market. It resembles math. If you do not understand the terms of the task, you will not be able to provide any solutions. Thus, if you do not know how to read the price action of a market, then you're unlikely to know how to make sense of what the price chart is telling you. Every trader who tries to convince you that it is easier to trade from indicators or trading software other than price action indicators is unaware of the reality of the markets. So there's lots of trading strategies. You can combine price action and the story of price easily with other types of indicators on your charts. Now look at how this price is moving. Doesn't it look like just an elevator climbing through a high rise? Is this the elevator descending to the same floors as it did as it climbed to the roof? Here's the elevator sitting on the ground waiting for traders, going up between that first floor, down to the ground, up to the first, down to the ground, up to the first floor. What is this? Probably 9 o'clock in the morning. So due to the repetitive nature of market participants and the way they react to global economic variables, the price action of a market tends to repeat itself in various patterns. Now, you can trade price action with confluence, say for a downtrend and a rejection of a horizon level or a rejection of a dynamic resistance level. In closing, you should know or have a good understanding of the basics of price action. One thing that I didn't touch on is what time frames you should begin to learn to trade on. Okay? A lot of that's up to you. But remember, there's a lot of noise in the marketplace. You need to learn to take the noise out of the markets.